Welcome back to another episode of Harmonious at Lunch, the show that fuels your business success. I'm Brandon Gano, your host and guide through the world of harmonious business growth. Today, we're unlocking powerful strategies with industry experts to help your business thrive. If you're a business owner, entrepreneur, or executive, you are in the right place. Join me and our incredible guests today on the journey to clarity, growth, and success. It is time to revolutionize your approach to business. Let's dive in with another episode of Harmonious at Lunch. Welcome back into some more bite-sized business advice. I always talk about on this show how we want to disrupt the way you think about growing your business. That's a catchy word, sometimes a triggering word for people, disrupt. A lot of people like to slap it on. Today's episode, I promise you, we have an industry disruptor with us, and we're going to talk about that very word. I'm excited to dive in. So let's just get right to it. So Kieron James, welcome to the show and thank you for being here.
Hi, Brandon. Great to be here and thanks for having me on.
So I mentioned it. You actually said before we started talking the word disrupt, and you mentioned how it's a trigger word for a lot of people and it really means nothing in most cases. But I think in your particular case, it means a whole lot. So define for me how you look at that word disrupt or disruptor.
For me, it's got to be around a transformative change, often brought around by or about by innovation in technology. I think we often look at a couple of very clear examples of disruption in the music sector. For example, we saw CD-ROMs and CDs, music CDs, appear in the 80s, massive disruption from vinyl, and then you go to Steve Jobs announcing the iPod and saying this changes everything. Why? Because it holds 1,000 songs. And then, within 5 years, I think Spotify launches and you've got all the music in the world on your device. That for me is genuine disruption. That's technological change that brings around about disruption. And what you've seen there as well is massive change in the way that those models, those industries are funded and the way that people are paying for the products and services as well. So that's a really great example. But you're right, you often see that used now almost as a marketing term. We're here, and particularly for startups and scale-ups, we're really disrupting. And sadly, that isn't often the case. So it frustrates me a little. It's been pretty central to a lot of the things that I've been involved in over the last 20, 25 years, and certainly is in the business that we're operating just now.
Yeah, I'm curious to hear about that a little bit too, because I find that the way we operate as human beings, we operate in patterns, right? I mean, for someone to be a disruptor, there should be a pattern of disruption in your life. So today, at least what we're going to get into in a little bit, you're disrupting the payment processing space, which we're talking about disrupting money. I mean, that's how people get knocked off. So let's hope that this episode goes viral, but not too viral, because this is an awesome technology that you have. But what is that pattern over the last 25 years? Give me a sense of how you just go about disruption in the world.
I think it's looking for opportunities and in all of the areas. So prior to doing what we're doing now, we're involved in telecommunications. And again, there've been several technological developments in that area, from standard telephony delivery over traditional copper networks to IP telephony, which is where we got involved. We were literally at the point, so we've been operating for a little while. We're at the point of buying a physical switch and then realized that would be an incredible waste of money given what was on the horizon with IP telephony. Again, what happened sort of shortly after that is there was a regulatory change. A new number range was introduced in the UK. It had a completely different pricing model, and it allowed us to introduce a brand new take on telephone conferencing services where the caller didn't pay anything for the calls because of that regulatory change. So for me, it's always about keeping an eye on whether it's technology, regulation, something that's going to give you a steer into what might revolutionize what's currently happening. And we had that. We were forced into that with the payments business, which actually didn't start life as a payments business at all. It started life as an online charity giving platform, purely because of that. So if I wind back the clock nearly a decade now, my son, my youngest child, decided he was going to jump out of an aeroplane to raise some money for charity. His friend at school had sadly passed from cancer, so he wanted to raise money for Teenage Cancer Trust. He did his parachute jump, and you'd think that would be the most exciting thing that would have happened that day. But Actually, it was later in the evening. We were all sitting down having our evening meal, and he came storming down the stairs. He said, "I'm really, really frustrated because a ton of the money that my friends have very generously given is not going to reach the charity. It's going to be deducted in terms of the fees for the online fundraising platform, debit and credit card charges, deductions from gift aid, which was a tax incentive really aimed at the charities." And we all really felt that, the whole family felt that. And we said, what can we do to put this right? As I mentioned, I was running a telecoms business at the time, but I had some great developers, great engineers. And we said, look, should we have a go at building a proof of concept and see whether we can create an online giving platform that's free, and we'll fund it through corporate sponsorship. So we undertook the telecoms business to fund the first £1 million that went through that platform. But really, the predominant charge by far and away was the cost of processing those donations. All the money that we were receiving from donors and passing to charities, a chunk of that was going to the various intermediaries because they were all processed via debit and credit cards. So that's how, again, that was the catalyst, or I guess that penny drop moment of there's got to be a solution to this. We need to really look hard and find out where it is, because if we don't, we're always going to have this really low ceiling on our impact and reach. We'll constantly be looking for more corporate sponsorship. So that's how we kind of got started with open banking and where we are now.
Yeah, that's an interesting term. So help me understand what is open banking, and how do we understand that in the context of what we're already doing in our businesses?
If you think about the way that we all transact now, particularly in an e-commerce environment, we are almost all the time using a technology that was introduced to the world actually in the UK, exactly the same year that I was introduced to the world. So you're talking about a very long time ago, almost 6 decades. And that technology predates e-commerce. It predates the internet. And again, I'm talking about credit cards specifically, and debit cards came a few years after that. The problem with that solution is, as I mentioned, there's lots and lots of intermediaries in that payment flow. So there are lots of people taking a slice of that pie in order for the money to go from a consumer to the retailer, or in our case, with a fundraising platform, from the donor to the charity. Open banking was basically an initiative that really came about through the Competition and Markets Authority in the UK, who wanted to really try and stimulate innovation in the banking sector. So it mandated 9 of the biggest banks to create and open up APIs for FinTechs like ourselves, we're a FinTech now, to be able to connect to those banks. Obviously, we need to get authorized. That took, in our case, a year. So it's quite a significant process. But once we're authorized, then with the consent of the consumer, what we're doing is effectively you say, okay, I want to pay $20 to this retailer. We give you wonderful consent to move that money directly from my account to the retailer's account, and nobody sits in the middle. We don't even touch that money. It literally goes from your account to their account. The beauty is it's super simple. So you're not entering a 16-digit number. There's no zip code. There's no first line of address. There's no card holder number. There's none of that data, which means there's no data to be lost or compromised. You are literally just authenticating that payment in your mobile banking app or in your online banking app. So it's kind of there ready for you to go, yes, here's the recipient. This is the amount. I'm confirming that's okay. You'll use your normal login credentials or biometric data to open your mobile banking app. It's pre-populated, tap, and it's done. And the beauty there, again, is that the money, the moment you do that, is in the retailer's account. So super fast, super simple, really secure. We talk about strong customer authentication in the credit card journey, and that typically involves things like using a one-time password or sending a code to your mobile device as an SMS message, something like. We're negating the need for any of that because you're just doing this directly within your bank.
Yeah, it's super interesting. And obviously what comes to mind is, and we mentioned this before we started recording, but Stripe, PayPal, I'm in the US. I don't know what other options there are across the world, but you have these massive companies that are taking 3-ish% of everything you do. And even when you send a wire through a bank, they usually charge you a fee. They hold your money for a couple of days. It's ridiculous. It's one of the biggest frustrations business owners have, is processing and collecting money.
Yeah.
You are going to piss a lot of people off with this because you're not charging 3% or anywhere even remotely near that. What does that look like? I mean, explain to me the difference of using a Stripe to collect money online versus integrating with your platform. I mean, that's a massive, massive difference for business owners.
It's a huge difference, and you're absolutely right. So, we kicked off with that term disruption. Our tagline is disrupting the disruptors, because again, you look at the sector and we have this technology that allows us to do that, to remove, probably a dozen intermediaries from that payment flow and make it just one. That clearly, therefore, allows us to reduce that cost to a tiny proportion of what it is now, because we're eliminating so many other parties that all have their own mouths to feed. So yeah, it is disrupting the disruptors, not just those very large incumbents and the card networks and so on, but also even in the fintech sector itself, some of the disruption there. I think we're already being described as the noisy neighbors in our sector, because we are making a bit of noise about what's possible with this. But it is just leveraging the technology. I've always been of the view that if we can make something profitable using a different model, and genuinely there is a model here, it's one that's, it's been well used in other sectors. Go back to music and look at Spotify. It's a subscription-based service. That's exactly what we're doing with the payments technology. So for a small business in the UK, we're now offering 1,000 transactions for pretty much the same amount as a Spotify subscription, if I'm up to date, but £9.99 sterling. So that will give you 1,000 transactions with no percentage on that transaction value as well. Because the technology, the rails that sit behind all of this allow us to operate that model.
Yeah, that's fascinating to me. So does it work with, I'm trying to just understand from the whole perspective, everyone's perspective, it's bank to bank, you said. Does it work with, like, could I use my credit card to pay a merchant, or that would be not supported?
So that's the moment you introduce a card to that payment flow, then you're introducing exactly the same networks that exist now. Same with Apple Pay. Although if you look at wallets now, Apple Wallet has already opened up, or the NFC chip, at least in the first instance, has now been opened up to third-party payment providers. So there are areas that we can start to get involved in directly using that contactless type technology, or that's on the horizon. That will be coming for sure. But right now, the sweet spot is really in that e-commerce environment in many ways, because if I get to checkout and I'm being asked to enter a card number and all of the details I've mentioned before, it's much easier for me to either do one of two things. If I'm in that checkout on a mobile device, on a cell phone, smartphone, I'm just going to tap and authenticate in my bank. My bank account will automatically open once I've selected who I bank with. And then, as I say, that data is already pre-populated, and I'll just tap and authenticate. So that's the sweet spot. In a desktop environment, then we might move somebody from a laptop or a desktop computer onto their mobile device, because it's the quickest way to get the payment done. And we probably do that using a QR code in most instances. So scan the QR code, same thing, pops open your mobile bank and approve the transaction. In terms of I guess the next big question that we get asked, certainly from podcast hosts in the US and further afield, when's this technology coming to us? Because we're probably, I'm quite proud to say, because it doesn't happen very often, although England have made it to the Euro finals, which again doesn't happen very often, but I'm proud to say we're kind of a bit ahead of the curve with the technology with this one. So open banking has been led quite well by the UK, probably about another 60 jurisdictions now that are following on and adopted that model. But I think there's probably, if I'm honest, there's probably a lot of interest in it not developing as rapidly worldwide for commercial reasons as we would like to see. But you're certainly seeing good adoption in a lot of other countries.
Yeah, I mean, are there some of the things that come to mind are when you eliminate the middleman, who's the one causing delays in making money, you obviously increase the speed, but you delay all of the other noise on both sides of the transaction. Are there transaction limits with this technology, or how does that work?
Yeah, so typically the underlying technology for open banking in the UK is something called faster payments. Now, the normal kind of level on or limit on a faster payments payment would be between 20 and 25,000 pounds per transaction. There are exceptions to that within a business environment. I think some of the business accounts will go up to £1 million in a single transaction. But that we have, for example, used car dealers using our technology. So for that scenario, it's absolutely perfect. Instead of paying, maybe 150, 200 pounds on selling a car using a debit card, that money's in their account for a penny instantly. So from their point of view, it means that somebody in the showroom as well can literally make that payment there and then and drive out, because they know the money's arrived. They're not waiting for 2 or 3 days for it to settle from anywhere. So again, it's speeding up that process within the retail environment too. Did I lose track of your question there, Brandon? If I did, forgive me. I think I've gone off on a tangent.
No, you're good. You're good. My next question, though, is always, obviously, this is a disruptor. You are a disruptor. This is a disruptive technology. To get it here is one thing. To get it wherever's next is completely another. I'm curious just what your vision is for your company and your technology in the next 3 to 5 years. How do you see that playing out and continuing to disrupt this payments market?
Well, we feel like we've really timed this very, very well. We're pleased with that. There's some luck with that as well, but we feel like we got into the space at the right time. With any nascent technology, you've got issues around adoption, people understanding it. There's that fear factor as well, particularly when it's money, particularly if you're making a payment and you've not used those payment rails before. The online giving platform has been fantastic for that, because we'd already established that people were donating through it and using cards. So there was an inherent trust, and even the branding around Wonderful is about that. It's, we are what we say we are. We want to be really transparent on everything. So we were able to build a little bit of that trust before we then got into moving the staff into, let's now create an FCA authorized payments business. So the timing's nice. The technology is evolving well. There's one big player in the UK who's managed to get the equivalent of the IRS, HMRC in the UK, our tax collectors on board. So that's been quite a significant moment for open banking. You can now pay any tax bill, including tax fines, using open banking, and we've seen really great adoption there. So I think that all of those things speak to this being a great opportunity and a really great time in the UK. We're supremely focused on the small business sector. There's about 5.5 million of those organizations in the UK. So we've got quite a big market to go at. And our view is, once we've established that model here through integrating with e-commerce solutions, we're integrated with WooCommerce, for example, at the moment, and Xero, an accountancy platform here in the UK. We'll carry on that integration rollout as fast as we can, by which time we feel like a lot of the other EU countries will be open and ready, or more evolved than they are now. There's some that are as evolved, if not more, than the UK, but there'll be new markets available there. And after that, I think we'll be at the point where the US is up and running as well. I think the mandate is either on its way or happening anytime soon. So I think you're going to see some adoption in the US very quickly.
How is it? Are you familiar with Zelle? I assume Zelle's worldwide. How is it different?
I'm not that familiar with them. No, I've heard the name mentioned, and I wouldn't like to comment without being an expert. So
Fair enough.
Sorry.
I was just thinking, because it's some of the things you said where Zelle does have to authenticate with email, text, a phone call, something like that. So obviously there's a little bit of differences, but we're used to using this technology. Zelle has a lot more limits, like lower transaction limits, which is another thing. Maybe that's a legal thing. I don't know, but it's a really cool technology, because I don't see businesses necessarily using Zelle for.
It's more of a consumer to consumer or friends and family.
Right. Whereas your technology clearly disrupts the Stripes and the PayPals and the way we accept payment through whatever online platforms we're on. Absolutely. I'm fascinated by this. This is really cool.
No, that's exactly where we are. We've had a couple of people within the business say, should we do some stuff, paying friends and family? And our view is that's kind of very well covered already. So we want to focus distinctly on that business market.
Yeah, that's amazing. Well, I appreciate you coming. I put your website on the screen. I know you're not here in the States just yet, but I would encourage businesses to go check it out. I mean, wherever you're listening, we do have a lot of listeners in Australia, New Zealand. We do have a couple in the UK. So shout out to all our international listeners. But this is really fascinating. And I love to end these episodes with a question though. So the whole episode we've kind of focused on the disruption end of things, the way that you've disrupted industries and technologies over the course of your career. And that's what I would love to ask you is, what is a question that the listeners can ask themselves if they want to focus on disruption, whether it's in their business, in their industry, in their career, whatever it is? What is a powerful question someone can walk away from this episode asking so that they can be a disruptor?
I think the thing, rather than a question, but a bit of advice would be to take time out in each week to do some exploration, just to have a look at what's happening, either directly in the sector you're involved with now, or if you want to think, bigger beyond what you're doing now, particularly if you've got any level of dissatisfaction with the current project, or you feel like you're pivoting too much, and therefore is the idea actually essentially right. But that exploration, I think, is really, really incredibly valuable. And I would do that in as broad a way as possible. Just look at what technologies are evolving, or how consumer behavior is changing, anything like that. Regulation, as I mentioned before, regulators are often seen as a stifling innovation, but actually the exact opposite is true. If you can look at how a new piece of regulation actually closes down one sector and opens another, or closes some doors and opens others, then that's a really valuable thing to be looking at as well.
I love that. Yeah, you're focused on the opportunities. Don't say what's the problem here. Say what does this allow me to do to change. That's awesome. Kieron, thank you so much for being here. This is fantastic.
Thank you, Brandon. My pleasure again. Thanks.
For those of you watching, listening, first and foremost, the website is on the screen. It's also down below in the show notes, wonderful.co.uk. Go check it out. If you own a small business, which if you're here, you probably do. So go check it out. See what's on the horizon of maybe changing the landscape of how you get paid and pay people. And also subscribe. We want to make sure to have you back. We put on these episodes 5 days a week because we're a little cuckoo, but we also love to help you grow your business, get outside the box you find yourself in. So we'll see you on tomorrow's episode of Harmonious at Lunch.